All right, welcome back to the Deduction Desk. My name is Joe. This is Sagar, and today we're going to be going over a very important topic, a topic where we talk about what happens after you get married, other than your life potentially being over. Just kidding, ladies. I know you're watching. We are going to be talking specifically about advantages, disadvantages to the tax code. Why would we, file for married filing single compared to married filing jointly? There are not many advantages, but it's important to understand the differences between the two. And then really, you're going from a single filing situation to a married filing situation. There's a lot of benefits to that, right?
Yeah.
So let's dive into it.
Yeah, so Joe said married filing single. I'm just going to point out it is married filing separate. And the reason why I point that out, it might sound too tacky, but I point that out for a reason, and that's after you've become legally married, you really only have 3 different choices you can make.
Okay.
You can go married filing separate, married filing joint, or head of household. Anything else is legitimately tax fraud. You cannot file single after you've become married. Now, there's certain rules around that. If you get married in a religious ceremony or in front of all your friends, but you never go and file the court paperwork.
Yeah, that's a good question. So what constitutes as being married? Do you have to go to the court and actually file the documents? Or does you getting married in front of a group of your friends in the park count as actually being married at that point?
So IRS makes it very clear. They say whatever the state determines as marriage is what the IRS follows. So if your state of residency is New York, for example, you don't need a court license in order to be considered married. A religious ceremony counts. In New Jersey, you can be religiously married, but you can be considered single technically if you never file the court paperwork.
Right.
So it really is a case by case based on the state. But generally what we say is it's about a sniff test, as always, which we always talk about. So if you're living together, sharing bank accounts, you got religiously married, and then you try to claim that you're single, I don't think that's going to fly.
It's not going to fly.
Yeah. Now the questions are, why would anybody do that? Because generally, you get a lot more benefits by being married for your tax purposes. Higher tax bracket, bigger standard deduction, larger limits when it comes to retirement contributions, NIIT taxes, trigger at a higher level. So there's tons and tons of benefits of being married filing joint. There are some scenarios where we've seen people filing separately and actually saving money on taxes, but it's super rare. There's like one couple I can think of where every year they want to know, hey, is it better to do separate or joint? Right? And so we run the numbers for them. And for them, for whatever reason, and the main reason being they're both extremely high W-2 guys. Right. So she makes, over $1 million. He makes right around $1 million. So for whatever reason, when we run their numbers based on where they are, their investments that they hold, properties that they own, when we run everything together, they usually save $50 to $60K a year by doing separate versus joint.
So key takeaway is you're not going to get away with getting married in the park for spiritual reasons and then still file single and get other tax advantages from other groups.
Correct.
Depending on your state.
Correct. And it probably makes a lot of sense to have your accountant check these things for you. It's not that hard to do if you use a good tax software.
Sure.
So for us, you'd have to prep the tax return, and I could hit a couple buttons, and it's going to tell me how much the savings is on joint versus separate and vice versa. Yeah. So asking your accountant to run that yearly, pretty simple thing, something you should be doing regardless, and they should be able to do that for you for free. We do it for free for our clients. Now, obviously, prepping the return, if you decide that you prefer to go single, is more cost, right? You're doing more returns, and there's definitely some administrative costs of splitting everything out, but just check and make sure that you're not leaving some money on the table. It's pretty simple and something your accountant should be able to do for you pretty easily.
So let's dive in it. Why do you get married? other than the fact that you love your wife.
Yeah.
Other than that, why do you get married filing jointly? What are the advantages to having that tax return?
You're going to beat the odds.
If you're the 50%, you're going to be on that good 50% side. Everybody thinks when they start.
The tax code, as we know, is written to incentivize certain things that the government wants. Right? Or society in general wants. So what does society and the government really want? They want people to be married and have kids. Right? So as a result, you're incentivized to do that. You get a tax benefit for that. You get a lower overall tax liability in almost every case, other than this one random couple that we have that always ends up saving money doing separate. Aside from that, almost in every scenario, you're going to pay less in taxes by married filing joint. You're going to get way more credits you can take that are not available for married filing separate filers. These include the earned income tax credit, child tax credit, a bunch of the educational college credits, dependent care credits, student loan deductions, adoption credits. All of that stuff goes away if you don't file joint, okay? Retirement savings, which is one that, Joe probably can speak on way better than me. You lose certain benefits and the ability to contribute when you are separate versus joint. So
when you are funding retirement, one thing that most people don't take into consideration is having the accessibility to a retirement account. And if you and your spouse are now married and your spouse has access to a retirement account and you don't, funding an IRA, if you're married filing jointly, will allow you to still deduct the contributions into that traditional IRA. But if you're married filing separately, it automatically does not qualify you to deduct
you
it.
get capped at 10 grand of income. If you make more than 10K of income, you can't contribute.
You can't contribute. Yeah, so they basically make it clear that you're not going to get any more deductions by filing separately when it comes to retirement. So married filing jointly does have a big benefit in maxing out the threshold of contributing to IRAs.
Yet despite all of this, we still see people filing separately.
Right.
And they have reasons behind it. And those reasons are in our next video. No, I'm just kidding.
Buy our book.
In our course that we're selling for $29.99. No, the reason behind married filing separate and why you want to do it, it's a handful of reasons, right? The first one is legal liability protection. Maybe your spouse got in trouble. Maybe they're on the verge of being sued, or maybe they're suing somebody and you don't want to be caught up in getting all of your stuff put out there personally.
Yeah, Sagar's example was you are a
parachute
instructor and you forgot to pack the guy's parachute. Not only are you fired, but you should probably do married filing separately. So the legal liability
doesn't go to your wife.
Doesn't go to your wife if you did that.
Yeah. There's legal reasons, right? None of those reasons are going to save you money in taxes. Okay.
Yeah.
And in fact, most of the reasons that we're going to give here won't save you money in taxes per se. There is one reason where we've seen that some people do it this way, and that has to do with income-based student loan repayments. It's legal according to everything I've seen.
Yeah.
Do we advise people to structure their tax situation based around student loan repayments? Not necessarily, because I don't think there's like a huge
you're taking much larger, you're losing a lot of other benefits from filing jointly just so you can get the benefit of that income from student loans. And I think, depending on some people's situation, maybe you're not funding retirement, maybe you're not at a huge bracket level where it makes a difference. And then maybe that this income side of it does make sense if your income is low enough where it matters.
So let's run a quick scenario of this, right?
Yeah.
So we have a couple that we work with who doesn't save any money by doing married filing separate. I think in fact, last year they paid about $25,000 more by doing married filing separate. Okay. But the benefit they had was one spouse, they both went to medical school. One is making a lot of money and doing very well. The other one is kind of jumping in between careers and had a baby and kind of is not making as much as her spouse, right? Now, when she goes to apply for her student loan repayments, she's getting a really high number of monthly payments, almost her entire salary. And the reason why is because they're filing jointly. So when they proposed a separate filing and they submitted it to, her loan holder, they basically came back and said the amount she would pay would save somewhere around $3,000 to $5,000 a month in repayment.
Oh, wow.
Right? So they're going to pay that extra $25,000 in tax with the hope of saving $40,000 to $50,000 in actual repayments per year.
For student loans.
For student loans.
Right.
So their money in their pocket ends up, they save about $25K. And now this isn't forever. Like, what happens if she starts making more money and her repayment number goes back up?
Yeah.
Then,
or the law changes.
Right? So it's not the best. I don't think it's the greatest strategy ever. I think it's, a case-by-case basis. Some people it really works for. Most of the people we've worked with have done this for a year or 2 years, and then eventually they just say, hey, the student loans are still pretty high. money and we're losing too much tax benefit.
I'd rather just save the taxes.
And then they just put it together. So those are scenarios where I've seen where it works, right? The other ones are if you have one spouse with a really, really high medical expenses, maybe IVF or some health issues, that might be a scenario where you want to consider taking some of those expenses and splitting it so that that one spouse that's bearing the higher tax burden is able to take some of those expenses at that lower limit, right? That's an option that we've seen. Obviously, divorce and separation, you just want the other person out of your life, file separately, right? And then weirdly enough, certain states, community property states in general, sometimes not like Texas, for example, with Texas is a community property state, but they don't have a state tax return, but like Colorado would qualify for this, where you have a higher state income tax. In weird situations, you do end up having a significant state tax benefit sometimes. And if that's the case, and you are saving money from the state standpoint enough to offset the federal, might be a reason. But like I said, this is all stuff that we can literally run for you in a matter of a couple of clicks as long as your joint return is ready. So if you're using a CPA, I highly recommend, especially if they're using a good software and they're a good firm, they probably will be using a good software, have them go and run the married filing separate versus the joint. It shouldn't take them too much time, and it's worth at least covering every angle for yourself.
Yeah.
So in general, if we could leave you with one point here about the next time tax time comes around and you think about married filing joint versus single, it's almost never worth it. You're probably not going to save any money doing it this way. There are certain scenarios like we went over where you should consider it, mainly student loan repayments and legal liability. Outside of that, I don't see much benefit for it.
Yeah, good. So you heard it here. Get married, America. It's good for your taxes.
Yeah.
Thanks for joining. We'll
Thank
see
you,
you
guys.
on the next video.